From Forex Traders Daily, this is your daily analysis with Ross Mullins, live from Richmond, Virginia.
Hello everyone, this is today's video analysis for January 17, 2017. Today we're going to be taking a look at several different currency pairs because the market has moved to what I'm going to call market extremes. It's been moving pretty aggressively over the past 24 hours, moving into highs that it hasn't seen in several weeks or lows that it hasn't seen in several weeks. So when the market's at these extreme levels, there's two potential outcomes. It has to either break through that price ceiling or it has to find some intraday reversal. So let's take a look here at the euro dollar. We've been trading this since yesterday. It's one of the suggestions I had during the live trade room, was looking for a long or buy scenario here on the euro dollar yesterday. And you can see it down at the bottom of the chart. We're seeing about 100 pips of profit on the current open position that we have here for the euro dollar. It was a buy on a dip into support, in agreement with the current momentum that we've seen since last week. Now, President-elect Trump has had some comments last week during his press conference. Yesterday, we had some comments that caused the dollar to slump a little bit more. So that's the direction we've been working with for the U.S. dollar, is the continued slide of the U.S. dollar that we've seen. You look here on the euro dollar, it moved higher. Let's go ahead and zoom in one time. You can see the purple shaded area over the past couple of days, 1-2 days, yesterday, settling down here into this purple shaded area support. That was my suggestion, sitting into support to go long into the purple shaded area. And you can clearly see the market has moved in that direction. Now we're at that extreme level, the high that we actually haven't seen since going back to early parts of December. So when you're at this high, like I said, there's two potential outcomes. It either has to break through this price ceiling right around the 106.90 level and continue to move higher, which if it does, we already know where it's going. That's the green zone, just like what happened here on the left. Or the potential outcome is for reversal. So let's go ahead and put two more arrows here. One is it reverses and goes back down on an intraday basis, maybe down to the purple zone or lower. Or the secondary option is it breaks through. So we need to watch for both of those today. I don't think right now is a good time to do either thing. I don't think you want to go long because it hasn't broken through that price ceiling. I don't think there's any real reason or evidence of price action to go short yet. So we don't want to do that either. So we need to wait for one of those two things. Price action and indications of reversal, maybe some good comments about the U.S. dollar, maybe some positive data that would cause this currency pair to go down, or we look for more negative comments, we look for the shattering of that price ceiling 106.90 and a continuation higher. Let's take it down to the 4-hour time frame. So as we get down here, again, we're looking for the evidence to one of those two potential outcomes. It either, again, reverses and goes back down or breaks through this price ceiling. When you're at the extreme, it's a difficult scenario to go long. You know, I say this all the time in the live trade room. Remember that old saying, buy low, sell high. If you're at a high point, it's a difficult scenario to go long unless it shatters that price ceiling, which it so far hasn't really done, around the 106.90 level. So we have two potential scenarios today. Again, watching for clues reversal. I think a significant bearish move pushing back underneath the 106.60 level, the bottom of that blue zone, may give us a clue that we're looking for some intraday reversal to go back down. Watch for, a shooting star candlestick or a bearish engulfing candle. Those types of price actions that indicate sellers are interested in the currency pair still. Current wick may be something to consider, but I don't think that's good enough yet. Or, again, the next opportunity is an open and close, a breakout above 106.90. We look for the continuation of the rise here for the euro dollar. Let's just take a peek at a couple of different pairs and look at that same scenario. Here on the dollar franc, we've seen a significant fall on the dollar franc, actually pushing through what was our support level, the yellow shaded area, right around the 1.007055 level. It pushed through it, and now we've tackled down here into the parity level, right into the pink shaded area, right around 1.0. Let's go ahead and zoom it in again. So, again, when you're at the extreme, we have to watch for one of two different scenarios here for the day today. Either we watch for evidence of reversal for some intraday pullback, possibly back here to the yellow zone and what was our support, or the next thing is that shatters that price barrier, that 1.09990 level, the bottom of the pink shaded area, to go lower, take it down to the 4-hour time frame. Doesn't change it. It just gives us a little bit of a different viewpoint. Again, you're looking for a hammer candlestick, a bullish engulfing candle as indications of reversal, or you're looking for that breakdown of the parity level for the continuation lower. If you're a seller or looking to go short, if you haven't gone short and you're looking to go short, I don't think you want to do it right now. It's obviously run into a price barrier and can't so far break through it. It either needs to go back up to the yellow zone and find resistance, similar to what happened here at the green zone. It found support at the yellow zone, rallied to the green zone, and then made its fall. So support at the pink zone, we would look for a rally to the yellow zone before looking for the next fall for the dollar franc. Moving on, let's go over here to the AUDUSD. We've been talking about the green shaded area here for several days where the 100 period moving average sits. 3 days, found resistance there, bounced down. We had profit on a number of trades coming down from the 74.95, 7,500 level. Today, a little bit different. It's now pushed through that price ceiling. So again, that's a similar scenario that we've talked about on the euro and the franc. We look for it either to find resistance and bounce down or break through that price ceiling and continue. Again, there's only two potential outcomes at each one of these colored shaded areas on my chart. One is it breaks above and goes higher. One is it bounces off and goes lower. So for the past 3 days, it's bounced off of it and went down. Never made it all the way down to the orange zone, unfortunately, because I was looking to buy it down there. But now settling out just above there. Again, the price ceiling is the yellow shaded area. So far, it's finding some intraday reversal. Let's take it down to the 4-hour time frame. We're seeing some intraday reversal from the yellow shaded area, but I don't think it's good enough to call this a short opportunity. Of course, if you're going to go short, the closer you can get to the yellow zone minimizes your potential risk. Or I suppose the next thing is a break back underneath the green shaded area. Let's just move it on over here to New Zealand. Similar situation. Let's go ahead and just take it down to the 4-hour time frame. There's two scenarios here, right? It either shatters the price ceiling, 71.80, to continue the move higher, or we watch for resistance and reversal here for the New Zealand dollar. Same thing over here on the JPY, USD JPY. Let's take it on down to the 4-hour time frame. One of two things happen. Right now, we're finding support at the orange shaded area. So if for us to see it go lower, we either need it to rally to resistance, which is a possibility as it's coming back up right now. 113.85, 114.15, support, rally into resistance may become our opportunity. The break above that resistance in the yellow zone looks for it to go higher. Support right now is at the orange shaded area, obviously, and for us to see it go lower, it will need to shatter that price barrier, 112.85, for it to go lower. I think this may be a currency pair to watch today, especially if we see some continued weakness for the US dollar. Watch for those reversals, though. But yellow zone may be something to watch for as we go through our day today. US CAD, similar situation. We see the pink zone. If it's going to continue to go lower, what needs to happen? It needs to break out underneath the pink zone, currently sitting as support on top of that pink zone, watching for support and reversal for potential intraday rallies, or the breakthrough that price barrier at 1.3 thousand for the continuation lower. And the pound dollar, I'm not even going to touch that one right now. With all of the Brexit information we've had released over the past couple of days, the weakness of the US dollar, the gap from the weekend, I'm not even touching that one this week.
From Forex Traders Daily, this has been your daily analysis with Ross Mullins. If you would like to get Ross's analysis on all the currency pairs he's watching and all the trades he takes today, join him in his live trade room by clicking on the link below. Please leave any comments you have about today's video in the comments section below.